Wait, stop scrolling. I need you to hear this right now. Because what I'm about to tell you happened in 1929. It happened again in 2008. And it happened again in 2020. And every single time, a small group of regular, ordinary people, teachers, truck drivers, nurses, small business owners, they walked away as millionaires. Not because they were lucky, not because they had connections, not because they were born rich. They knew one thing, one pattern, that 99% of people never see coming. Okay, so here's what nobody in the mainstream media is talking about. Every 15 to 20 years, without fail, there is a massive transfer of wealth in this world. $15 trillion. That's with a T. Moves from the hands of people who are sleeping into the hands of people who are awake. Let me prove it to you with real numbers. In 1929, the Great Depression hit. Stock markets crashed 89%. Unemployment hit 25%. People were devastated. But here's what they don't teach you in school. Between 1929 and 1932, 1,058 new American millionaires were created during the worst economic crash in history. How? They bought assets when everyone else was panic selling. Fast forward to 2008. The housing market collapses. Banks are failing. Lehman Brothers gone overnight. People are losing their homes, their savings, their retirement funds. And yet, between 2009 and 2012, the number of millionaires in America increased by 600,000 people. 600,000 new millionaires during a recession. Are you starting to see the pattern? And then 2020 hits. COVID. Lockdowns. The stock market drops 34% in 33 days, the fastest crash in history. Within 12 months, the stock market was up 70%. Real estate prices exploded 24% in a single year. Bitcoin went from $5,000 to $60,000. And the people who moved during the fear, they 10 timesed their money. This is not luck. This is a cycle. And cycles repeat. Now here's where it gets really interesting and a little scary. Every single time this wealth transfer happens, the same 3 types of assets explode in value. Number 1. Undervalued stocks. When fear is at its peak, quality companies go on a 50%, 60%, even 80% discount. Warren Buffett's net worth increased by $12.7 billion during the 2008 financial crisis, because while everyone was selling, he was buying. His famous quote, "Be fearful when others are greedy, be greedy when others are fearful." In 2020, companies like Apple, Amazon, and Tesla were trading at massive discounts for a few short weeks. Apple stock has gone up over 500% since the March 2020 low. If you had put just $1,000 into Apple in March 2020, you'd have over $6,000 today. Number 2. Real estate. Every recession creates a real estate buying opportunity. In 2009, average US home prices dropped to $208,000. By 2023, the median US home price was $416,000. That is literally double in 14 years. People who bought real estate during the fear of 2009 and 2011 didn't just build wealth, they built generational wealth. Number 3. Alternative assets. Bitcoin was worth $0 in 2009. It was born out of the 2008 financial crisis. By 2021, it hit $68,000 per coin. Gold went from $800 per ounce in 2008 to over $2,400 per ounce by 2024. That's a 200% return. These aren't coincidences. These are the assets that always win during wealth transfer cycles. But wait, what does this have to do with right now? Here's the part that should make your ears perk up. Look at what's happening around us today. Global debt has hit $307 trillion, the highest number in human history. Inflation has eaten 20% of the purchasing power of the dollar in just 4 years. Central banks around the world are cutting interest rates. Historically, this is the signal that precedes the next major wealth cycle. Commercial real estate is sitting at a 30-year vacancy high in major cities. And here's the stat that should wake you up completely. The top 1% of Americans now own more wealth than the entire bottom 90% combined. That gap, it doesn't close by itself. It closes during the next wealth transfer. Smart money, hedge funds, family offices, billionaires, they are right now quietly repositioning, buying assets at scale, moving out of cash, loading up on real estate, commodities, and selective equities. And the question is, are you going to be on the buying side or the selling side when the cycle hits? Okay, let's get practical. Here is your actual 3-step action plan. Step 1. Build your war chest right now. The people who win in wealth cycles are the ones who have cash ready to deploy. That means cutting unnecessary expenses today. That means building a 6-month emergency fund, not because the world is ending, but because opportunity requires capital. If you can save even $200 a month starting today, in 12 months you have $2,400 ready to invest at exactly the right moment. Step 2. Educate yourself on 3 assets. Pick one stock index fund, like the S&P 500. Learn one real estate market in your area, and understand at least one alternative asset, whether that's gold, Bitcoin, or REITs. You don't need to be an expert. You need to be informed enough to act when others are frozen by fear. Step 3. When fear hits, move. Not rashly, not with money you can't afford to lose, but move. The average person waits for certainty. Millionaires move on probability. In 2020, the window of opportunity lasted exactly 33 days. The people who acted in that window, they changed their lives. The people who waited for certainty, they bought at the top. 33 days. That is how short the window can be. Here's my final thought. Every generation gets 1 or 2 moments where ordinary people can make an extraordinary financial leap. Your parents' generation had the 1980s real estate boom, the late 90s tech explosion, the 2009 post-crash recovery. Your moment? It may be closer than you think. The people who become millionaires in the next decade won't be smarter than you. They won't be luckier than you. They will simply be the ones who knew the pattern and had the courage to act. Now you know the pattern. The next move is yours.